WTI crude futures held steady around $72 per barrel on Friday, and it looks like they'll end the week with some gains. The reason for this is that investors are thinking there might be less oil available globally, which is more important than worries about higher interest rates affecting the world economy and energy demand. Saudi Arabia recently announced that it will continue reducing its oil production by 1 million barrels per day in August, and Russia plans to cut its exports by 500,000 barrels per day next month. Kazakhstan, an OPEC member, also had a drop in oil output because of power problems, so they had to import gasoline from Russia. In the US, crude oil and gasoline inventories decreased more than expected last week, probably because the demand was higher. However, investors are still being careful because the latest jobs data in the US suggests that the Federal Reserve might tighten its policies even more in July, and other major central banks might do the same. Additionally, China, which is the biggest importer of crude oil, is still struggling to recover from the effects of the pandemic, and that's also affecting the overall mood in the oil market. The WTI crude oil market sentiment leans slightly bullish as the current price of $72.60 hovers above the 50-day moving average at $71.60, which has been providing resistance. It appears that we are currently attempting to surpass this significant technical indicator. A breakthrough above this level would potentially lead to a potential upward move toward the $75 mark, which represents the upper boundary of the consolidation range. So, here's the deal. WTI crude oil prices are on the rise again this week, making it the second week in a row. The reason behind this is that demand for oil is holding up pretty well, and on top of that, there's been a big drop in the amount of oil stored in the US. Even though people are worried about interest rates going up, the overall outlook for oil demand is actually pretty positive. People are traveling more in the summer, and Saudi Arabia is doing stuff to make sure prices stay up. The OPEC gang is also cutting down on their oil production, and everyone seems to think that the demand for oil will keep growing. But hey, investors are still keeping an eye out for any economic news and inflation numbers that could mess with interest rates and, in turn, oil prices. So it's a bit of a wait-and-see game right now. Thank you for watching. Please don't forget to like and subscribe. See you soon.